Hello, folks. Brendan Chapman here today. It's another edition of the Theo Night video for Wednesday, July 20th, 2022. And man, can't believe the summer's almost over. Anyway, I guess we're half through. Anyway, let's get rolling. So to talk about the market today, the question becomes, we're running higher. It's the second up day in a row. We've had a nice week in terms of the rally. Does the short-term pain over the next number of months, is it worth the long-term gain of possibly having a very bullish 2023 as the Fed begins to unwind some of the tightness, right? They start to let go of the rope that they're reining in right now in terms of liquidity by raising rates, reducing the size of their balance sheet, all those other good stuff. And so that's a big question right now. Is this a buying opportunity? And there are those out there that certainly think that the Fed is going to navigate this perfectly, right? For example, 2008, we had a situation where we had 4.1% GDP in the second quarter. The Fed had kind of been tightening rates. Oil surged to 140. Well, guess what? There was this thought we're going to have this Goldilocks economy, right? Not too hot, not too cold, but just right. You get this feeling right now that there's this optimism that, I think those within the institutional class probably have sold a bit. Cash levels are high. We're looking at this and saying, boy, this is a great opportunity if the Fed looks to start to cut rates by November, according to some, maybe early next year, according to the Fed Funds Future. And so the idea is that, there might be some near-term volatility as we get to the fall, but as everything turn around and everything becomes just right. To be honest, I think that's fool's gold, just like it was in 2008. The risks are very, very high right now. And as we look at the S&P, as we're pushing higher the last couple of days, let's see how the VIX is responding. I forgot to bring something up over here. How is the VIX responding? Well, we're basically just touching lows that we achieved on June 8th. It's not like the VIX is getting crushed here. The people are selling vol like crazy, and we're driving it down to 12 or 14 or 15 again. This is a different climate, right? The volatility is still remaining high because why? We're seeing a lot of movement in the market right now. As we look at the performance today, you see communications topping the list. We got Facebook in the mix there, Meta, for example, right? We got cyclicals, 1.76. We got technology in there as well. Energy also surging and finished near the high, or going to finish near the high of this session today. So the idea is this real optimism, right? Is this a good value opportunity? Last night, I taught a mastermind around long-term investing. And we looked at a number of names. What about Intel, right? Is this stock one that is poised to move significantly higher? Well, it's a highly cyclical stock. If we continue to see a bear market, guess what? This is probably a stock that would likely continue to decline. Now, in order to kind of get perspective, let's look at yesterday. So as we look at the SPY, certainly the S&P was up nicely. We closed near the high of the session, both bullish dynamics. But let's look at how bullish. So I'm going to go $ADVN. These are advancing issues plus $DECN. So we're adding together advancing and declining issues. And then what we're going to do is we're going to bring up what's called a pairs ratio study. It's just a study in thinkorswim, and it takes a ratio of advancing to declining issues. Notice yesterday, we saw about 5 times more advancing issues than declining issues. If we look at it intraday, 5-day, 5-minute, we had actually spiked. We saw over 9 times more advancing issues than declining issues. At least intraday, at one point yesterday, we saw a 90% day, which is very significant. You don't see that very often in terms of advanced decline. What about volume? So let's go $UVol, because it was up yesterday, plus $DVol. Got the $. Notice where this finished yesterday, up around 14. We saw 14 times more advancing volume, or volume on advancing stocks, than declining stocks. It was a very significant day yesterday. And when you look at this, this is higher than when we were on May 13th. It's higher than we were on May 27th, as an example. Now, if we go back to that $ADVN line, plus $DEC, and forgot to show you this, but notice right here, we saw over 6 times more advancing issues than declining issues. And what day was that? May 27th. So think about this. Sometimes something's so good it's bad, right? The idea that on the May 27th, back here, the market was basing for a little while. We caught a breakout above resistance, and then we proceeded to form maybe one additional higher high before we began to break down again. That's how bullish it was yesterday. In fact, probably even slightly more bullish given the volume that we saw that day as well compared to May 27th. But the idea that we saw a very one-sided trade yesterday, and yeah, we did inch higher today, but the risks are the downside. It may be pointing to the fact that we could be starting to get a bit tired in this move. But we're entering a summer period with lighter volumes, and we're pushing forward to the fall. Maybe we do extend a little bit higher here. So the question is, do you rush out and buy a bunch of stuff in the thought that we're going to recover nicely and start to really trend significantly higher next year? Again, that might be a very, very difficult road to hoe. So as a result, you got to be poised to look at this rally and find the opportunities to potentially look for bearish trades. Don has a strategy that he engages in called the in-out spread. It's very, very effective when you see very overbought markets, which if we take the range of expected movement, the range between the red and green line is a 68% probability range. We're breaking through that today. And boy, if you look at the move here, 385 to about 393, about $8, if we could push to 405, if we could push to 400, 401 in the next couple of days, we could be setting up very, very potentially significant move to the downside. Okay? Good opportunity to take this downside. So we could see some downside potential. Sorry, someone's pinging me. Don's pinging me. So again, we got to take it in stride. We look at the sectors, utilities taking in the tailpipe. We look at areas of strength, high short interest names. Look at these. Look at the list of stocks here. Very few of these stocks are down. Almost all of these are up. Stocks like Carvana, for example. Is this a great company? I would argue, no, it's not, right? It's in a very, very difficult circumstance. Reliant on who? Reliant on consumers spending and buying new cars. Yeah, I get it. Go out and buy an electric vehicle. Sure. Right? I'm not sure how many of those they have in the vending machine. I'm sure they have some. Workhorse. Breaking out today. Obviously, we had the news from Go EV last week. We're consolidating. Nikola, right? Is this a great company? I don't know, but we're seeing a big move here. These are companies that have significant short interest. And what you're seeing is that we're seeing the squeeze happen in high short interest names. And those are some of the highest short interest names out there. If I take a little bit lower, little bit lower tranche here, CGC today, Canopy Growth, right? And I probably need to update this one. GRWG. Again, these are cannabis companies, aren't they? They're experiencing a big move today. So as we look at it, again, how long is this short squeeze going to last? That's the big question. And in a bear market climate, generally speaking, these short squeezes present an even better opportunity to go short again, right? To play the downside activity in those issues. So we're kind of playing a waiting game now. Now, if you want to take a stab at it, I mean, there is opportunities to buy those out of the money call spreads. The problem is right now the skew is not as favorable for buying out, because what's happening is that the call volatility, let's just take, for example, TLRY. And we'll take a closer look at it here in a second in terms of the option activity. If you look at TLRY, let's say we go out to September. Notice how the volatility, we're rising here a little bit. This is okay, right? You could buy a 450 and sell a 550 if you're really speculating for a big move here. And the volatility, buying lower and selling higher, is favorable. What about doing it on an oil stock like MRO? You look out here and you'll notice falling volatility until you get all the way out to 30, 31 MRO. Are we really going back to prior highs? That might be a difficult expectation, but probably more probable in oil stocks than many other companies. Despite the fact we saw a pretty significant gasoline build to this week. Coming from the data, we had a pretty significant build. We had a little bit of a draw in oil. We're back into the 5-year range. Okay, but is MR going back to 32.50? I guess anything's possible, but it makes it expensive to try to speculate out here. But for companies like TLRY, I guess it does have generally relatively high short interest. People buy calls to hedge and sell puts. So the positive vol skew is favorable out here. Now today on TLRY, it was just a weekly option for this week's expiration. A lot of speculation on the out of the money calls here, buying 4.50s, $4 and likely 4.50s as well. Okay. Near term push. If a lot of this carries over to the open interest tomorrow and we start to take out $4 on TLRY, we could see further squeeze, gamma squeeze, short squeeze, and drive this higher. Okay. So again, there is opportunity on likely more on an intraday basis on these high short interest names. You can just quickly do a search for high short interest stocks and make that, if you're day trading, look at that, your focus. Look for a bigger move, right? Look for a big range intraday. And this is one that you may set up very well tomorrow. If we start to see some early momentum, the stock starts to push and we break through $4. But again, you can watch the open interest. Do we increase above 17,000? Are we sitting on 50, 60,000 open interest tomorrow? Are we sitting on 20,000 at the 450? This will help create the gamma squeeze and drive those stocks a bit higher. So some things to watch here on TLRY. As we circle back to the market, we look at oil /CL. Again, oil's down minimally today. But one of the news we saw was that coming out from Saudi Arabia, again, you can't, right now you can't print oil, can you? Okay. We're talking about capacity constraints. We are seeing a little bit of an uptick in oil production in the United States, around 12 million barrels. That was as of last week. But clearly we're in a situation where we're undersupplied. But the silver lining for those that are bearish on oil is that it is starting to hurt. We're starting to pull back on consumption of gasoline and refined products. And that may help solve the problem as inventories increase when traditionally this time of year they decrease. But when you look at the product depth here, /CL, you look at the slope of this red line, it's basically the same going back for the last 20 days, 2 weeks. What the market's saying is they don't think that we're solved the supply issues. They still believe that the risk is to the upside in oil. And there's been significant trade in stocks like TLRY. I went over this one last week for our members. What was it? Last Wednesday, I think, or last Wednesday or Thursday, it was right here. Bullish call activity in TLRY. Same with Antero Resources. They've made some nice moves. Today, it was MRO's turn. So MRO, you typically see a lot of option activity in a stock like this. But this was for a September's expiration. And looking at upside to 24, again, you'll see 5,000 contracts is greater than the open interest. Mostly bought at the 24 strike, which isn't too far out of the money. But again, it dovetails with some oil and gas activity over the last week, this time in MRO, driving it higher. Another area of interest to consider is that of agriculture. There's an agriculture ETF called MOO. It's had a nice couple of days here, particularly yesterday. But today, specifically, it was Bunge Limited. So nice move. We're at resistance. Volume wasn't extraordinary. But on the Analyze tab here, you'll see that Bunge, what it does, it is a agricultural business and food company. So the idea is if there's increased spending on agricultural products, this company could benefit. You could put it in the mix with companies like ADM, for example, or FMC, or Caterpillar potentially, rather Deere probably more so. Even like potash companies like Intrepid Potash, for example, or CF Industries. These are companies you may want to start to watch. If this is an early indication, are we starting to see a bit of strength in the agricultural space? I talked about it last spring in March, and that when this was an area I was very bullish on. But as we started to get higher and higher, the question was, how much are we planning? how much are we planting right now? I mean, are we going to really see fulfillment, meaning increased purchases of agricultural products if we're not planting stuff? Notice here the Bungie's back near support again at about $85. So right now we're kind of testing resistance around 92.50. We could start to take this out, and the earnings are coming up on the 27th before the market opens. So again, a stock to watch here on Bungie. It was a 92.50 strike. So we almost reached that today, intraday, for a September expiration. Now, again, these are stocks that could possibly move regardless of what the broader market does, right? Focus on high short interest names for intraday trade. Look for stuff that's moving on the open. You could see increased option activity to help kind of fuel that move that those stocks experience. But continue to look at energy, continue to make its move in the near term here, and start to look at agricultural commodities. Now, there has been some bullish trade the last 2 days in XLB. Today's no different. On XLB, it was all the way out in January. And there is some expectation, hey, you know, we're going to see things reverse. And in the January, it was for the 90 strikes. So it was a ways out of the money. Not tremendous, but 2,000 contracts bought out here at the 90 strike. But this is the second day in a row there's been bullish activity in XLB. But remember, the short-term pain right now is the Fed raises rates, drains the pool of liquidity. It should create more bearish pressure. FCX, for example, was a stock on Monday that saw a bearish put roll up, anticipating FCX to break down. But it's kind of this juxtaposition of bullish interest in XLB the last 2 days. AUG 78 yesterday on XLB. But again, I'm pointing this out only because the short-term pain could be rather significant. As we look at, bigger picture, going back, 10 years, could we see ourselves back at 45 again? It's possible. Could we see ourselves at 60? This is a very real possibility if the dollar begins to strengthen and if the Fed starts to lose control as they begin to raise rates, 75 basis point, 1%, maybe more by the end of the year, even though those that are expecting the Fed to get on hold by November, again, the market's pricing in more early next year. But the idea is that the short-term pain in the near term could be rather significant. Probably best not to think long-term right now as an investor in hopes that the Fed has control into this tightening cycle while we're looking at continued high prices for goods and services. Food and energy may get even more expensive as we get into the fall, maybe early next year. There's just a lot of risks right now. But again, there's near-term volatility, which can create opportunity if you're watching that part. And again, maybe we do see a little bit of further strength in energy and energy names. And maybe we're starting to see some emerging strength in food as we move into the fall here. Anyway, and finally, certainly in this space, high short interest companies, we have, again, a lot of those names that are, EV type companies, Workhorse, Nikola, GoEV, these kind of things. Those companies have been doing relatively well here. But again, resource stocks is probably the one area that's starting to really kind of start to turn with firming up of energy prices and in particular natural gas. Because if you look at /NG, what you see is it's been on a tear of late, something we were kind of expecting last week, and may hit 950 again, which could be very, very positive for natural gas stocks as we're hitting towards the end of the summer. Anyway, folks, it's been a pleasure being with you. That's the video for today. We'll catch you back next week. Thank you.